This is Credit Suisse. Credit Suisse is or was a 167-year-old financial institution. It's a Swiss bank that just got bought for basically nothing in a forced-through deal over this last weekend in March 2023. I'm just dating this in case you're watching this from a Mad Max-style dystopian future, like looking back and wondering, I wonder how things did get so irreparably fucked. Let me take you back. In 2008, the global financial crash happened, which alongside the G-Unit album made it a really bad year. Now, since that crash, which devoured people's homes and pensions like some sort of fucked up, ravenous zombie badger, banks and regulators have been working hand in hand. Or perhaps, more accurately and begrudgingly hand in pocket, to construct a framework that requires banks to keep to the side a slush fund of money that they can dip into in case shit gets funky again. A sort of, rainy day fund, if you like. Now, on the face of it, that sounds like a good idea, right? If banks get into trouble, their customers aren't at risk and they don't have to go to wider society begging for a bailout. But no! I'd sort of ignorantly, naively assumed that these slush funds would be constructed and capitalised by the banks hiving off from their billions of dollars of profit and putting them in a little safekeeping thing. Like right there, that would make sense, right? Like maybe having to hive off 2 or 3 billion here in 2010, 2011, it would have made weaker results that year or for a couple of years. But by 2017 or 2019, they would return to the market with both them and wider capitalism in a stronger, more robust position. Put simply, I would have thought it would be their responsibility to fund the rainy day fund. But no, in a mark of truly socialist generosity, Credit Suisse have, and I assume other banks also, have opted to share the burden of that rainy day fund across their investors. And what I mean by that is that banks were able to categorise certain investments as part of the slush fund. So even though it's people's money, even though it's redeemable at some point, like your granddad or your pension guy will want their money back at some stage, the bank can, if they get into troubled waters, just recategorise your investment as part of the slush fund. And that is what has happened at Credit Suisse. Now you might be thinking, well, what are these troubled waters, Aid? And the fact is, this is the culmination. This is the sort of latest in a series of scandals and missteps for Credit Suisse. It's found itself involved in money laundering for Bulgarian drug dealers. There's corruption in Mozambique, former employees and executives involved in spy scandals, data leaks. In fact, a Florida attorney who represents a suite of whistleblowers, Jeff Nyman, said the bank likes to say it's just rogue bankers. But how many rogue bankers do you need to have before you start having a rogue bank? This is what I like to refer to as a few good apples situation. So yeah, there was bribery, corruption, exposure to other shithouse investments. And so then, unsurprisingly, a bunch of their clients started voting with their feet. So their reputation was already pretty bad when on March the 9th, the Securities and Exchange Commission queried their annual report. Like, what is this? This doesn't make any sense. What is going on here? Which forced a delay in its publication, and then the bank had to admit there were material weaknesses in its reporting and controls. And I guess after the Silicon Valley Bank collapse only 2 weeks ago, everyone, including Credit Suisse's largest investor, were like, you know what, fellas? I'm out. Maybe I'm just done with, which I have to say, fair play to you, Saudi National Bank. You stuck it out through the bribery, the political corruption, the drug cartel, the money laundering, you rode out these storms. You hung on in there. Don't let anyone tell you that your reputation may have been sullied by maintaining close proximity and friendship with such bizarre industrial conduct. Don't let anyone suggest that might mean that you too are involved in some of the shadiest shit going. I refute that. You rode out the storm. And that shows character. That shows a steadfast commitment to making this work. So anyway, Saudi National Bank refused to put more money into Credit Suisse. Also, banking regulations mean they can't own more than 10%. So, tell you what though, I bet that's the first time any bank has ever been thankful for any regulations. Hey, do you want to give me another 3 billion? I would love to, but my hands are tied. Oh, shit. Really? Yep. Yeah, totally tied. Fuck. There's really no way? Nope. No, totally tied. I'm all tied up, dragged out into the town square and publicly beheaded. You what?
Oh, sorry, force of habit.
So their biggest investor bails, and that spooks the markets, which has already decided that since 2008, the share price has come down by 98%. Then there's such an exodus of client money that the bank have to go to the Swiss central bank and borrow $50 billion. Everyone's wondering what the fuck is going to happen. And then Friday, 5:30 p.m, the markets close. And that gives us about 60 hours where no one can sell their shares and no one can cash in their bonds. And in that window, the regulator, the bank, plus another bank, UBS, coordinate a buyout that not only devalues the shares further, but one that completely writes off $17 billion in bonds. Now, a lot of financial news sort of goes over your head a bit, doesn't it? It's talk of bonds and recapitalization and financial instruments. It sounds stuffy, I know, but let me break it down for you like this, right? A bond is like your granddad lending 50 grand to the bank that the bank can then use to expand or invest or recruit or whatever. And in exchange for that 50 grand loan, they will pay him a percentage, an interest payment every year. So he's got guaranteed income. Plus, a few years later, he can get his original 50 grand back. Now, all of those tens of thousands of bonds that exist in pensions and retirement plans, all of that is gone. It's like, quick, it's 5:30. While nobody's looking, orchestrate a cut price buyout.
Can we really write off all these people's investments?
Absolutely.
But all these other shareholders, they own the bank. So won't they just vote down the deal that devalues their own shares?
No, don't worry. They don't get a say because the markets are shut till Monday. Now the conversation turns to contagion because it's not just the little guy that gets fucked with this. It's like, does the Saudi National Bank have a strong enough balance sheet that they can take the hit on having their 9% of Credit Suisse devalued so violently?
And politically, how do they feel about this cut price deal being rushed through and decimating their stock?
Like, if you were a shareholder in Saudi National Bank or BlackRock or Qatari Bank or someone else who was clearly exposed to this Credit Suisse situation, wouldn't you now be asking yourself if perhaps now is a good time to sell up?
Because this is the thing, none of these places have to have the same material problems in their reporting or even a hole in their finances. They just have to have shareholders who have the perception that there might be a problem, and the subsequent selling frenzy might rob them of the cash they were dependent on for their next set of projects.
Let's say there's two banks. You've got Credit Suisse and you've got Bank Z. Let's say Bank Z own £7 billion worth of Credit Suisse, and that they were using that stake to get a loan to fund their next set of projects. They're hiring, building a new office, acquiring this business. Now, because their 7 billion in Credit Suisse or whatever is watered down to 2 billion, they find themselves withdrawing from projects, cancelling this program. They're not hiring anyone anymore. This office isn't getting built now. That's going to give off the perception to their investors that Bank Z is in trouble. Next thing you know, you got the whole perception is reality thing kicking in, people trying to get their money out. I know you say that there's nothing materially wrong, your balance sheet is very robust, but I would just feel safer with my Bulgarian drug money in these suitcases, thank you. Like, is this how it starts? Are we about to see a spread of failing banks and government bailouts again? You know, honestly, I don't fucking know. I don't. But how weird is it, right, that these bonds, they're called AT1s or Cocoa bonds, and they were designed specifically so that we could avoid a situation like 2008 happening again.
And they are now themselves going to result in people losing their pensions, just like in 2008.
Anyway, sorry to bum you all out, you know, if you've got a case of the Mondays or whatever, but just take solace in this, right? If everything collapses and you lose your home and your pension and everything, there will be a new set of regulations to make sure that this never happens again. Just like there was in 2008.